So, as you guys know, coming into every single trading week, we begin with the economic calendar. So, looking with the information being provided, Monday we did not have a news event at all. So, it was a little bit more difficult to navigate. Tuesday, we have, or tomorrow, 10 a.m. adults job openings. Now, there can be something to do, but don't come into the session with high expectations because 10 a.m. news tends to be a little bit more difficult to navigate. And another factor playing into that is Wednesday we have CPI. CPI is probably the biggest news driver in every single month, and once CPI releases, it can give a lot of clarity to how the monthly range will play out. So Tuesday might be a little bit difficult to navigate just due to the fact it's the day before CPI, and there's also only 10 a.m. news drivers, or a 10 a.m. news driver. Does that mean there's absolutely nothing going to be there? No. Because as you guys know, and we'll review this a little bit later on, as long as you have really even one thing, you can expect something to do. But Thursday, we have 8:30 a.m. PPI and unemployment claims, so we can expect this to be a good trading day. And then Friday, we have 10 a.m. consumer sentiment and inflation expectations. So we can expect something to do here as well. And for high or low of the week, we can expect either Wednesday or Thursday to form the high or low of the week. Now looking at the Forex triad delivered pretty perfectly from this hidden monthly cycle sequential SMT that we outlined last week. As you can see, the entire week last week in the Forex triad completely expanded in Q1. So when do you expect Q1 to expand? When do you expect any quarter to expand? Whenever you have sequential SMT in regards to true opens. So this sequential SMT, as you guys know, it was outlined last week for the euro and the pound. It happened under the revolving true open. And for the dollar, it happened above the revolving true open, which is why last week it expanded like it did. And now looking a little bit closer into the actual week, going from a 4-hour chart to the hourly chart, we can see that there are gaps that formed along the run. We can see this gap here on the dollar, this gap here, and then if we look at the euro, we have this gap, and then on the pound, we have this gap, and we have this gap. So what do you notice specifically about these gaps? And they introduced this to you guys. So some of you that have been paying attention, you guys will really see it. But what do you notice about these gaps? Yes, SMT fill. So as you can see, if we look at the euro and the dollar, they failed to trade inside of these gaps, leaving them opened and leaving them unfilled. While the Great British Pound, is my internet connection good? Can you guys hear me good? Okay. While the pound traded inside of these gaps, expanded, traded inside of these gaps and expanded. So whenever you have a direction that is established, what establishes a direction? Sequential SMT. Once you have that established and you know when a quarter should expand, you can go from that quarter's time frame, looking through it through the lens of a lower time frame, and look for gaps and look for the same phenomenon. So as we can see, the monthly cycle, SMT, it caused Q1 to expand. So if we look at a monthly cycle quarter, which is comprised of 1 week, which would be the weekly cycle. If we go from the monthly cycle to the weekly cycle, we can see gaps that form. And within these gaps, some of you already answered, we can see SMT fill. So once you have the narrative established from a higher time frame SMT, you can drop down to a lower time frame chart and figure out ways to get alongside the move. So looking a little bit in specific, let's say you missed all of this, right? You missed the entire portion of the run, but you were able to identify an SMT fill. And we'll zoom in on this one in specific. So we're going to look at this portion of price action, dropping down to a lower time frame, going from a 1 hour to a 5 minute. And as you can see, within that gap, what did we form? Sequential SMT. Now, what was taught to you guys at the very beginning of the year? If you have an hourly time frame gap, you look for a 90-minute cycle sequential SMT. What time frame is the 90-minute cycle tied to? The 5-minute time frame. So this is how you can properly use that information. If you pair it with SMT fill, as long as one asset trades into a gap and there's a cracking correlation within that gap, that can act as a single stage within and of itself. But if you have another correlated sequential SMT alongside with it, that is extremely, extremely, extremely high probability. And you can use this to get onto moves that might have already began or that might be running without you. All you have to do is find a gap and maneuver within there and work within there and get alongside a move. And if we look a little bit closer, what do we see? What do we see form again? It's crazy, isn't it? And then within there, and within there. So, quick summary. Once you have narrative established and you expect a quarter to expand, in this example Q1, you can drop down to a lower time frame quarter, look for gaps within there, and then look for cracks and correlations within those gaps to get alongside a move. And now we're looking at the index futures chart. So as everybody knows, you see it on social media, you see it everywhere. Everybody's talking about the market's crashing, the market's dumping. Recession is here. But what began this initial downside move from last week? You guys can see it. Yet again, sequential SMT. So what is likely to happen from here is really we just need to wait for stabilization. And until something equal to or greater than forms in this monthly cycle sequential SMT, then we could expect price to just stay stagnant or drop down a little bit lower and then return into the range. But in times like this where there's not a lot of clarity, especially whenever you have the markets decoupled, because as you guys know, whenever you have the US dollar trading in direct correlation to the index futures, price is low probability. And even though this move has dropped a lot of points, it's been high resistance. So it's been very difficult to navigate and very difficult to maneuver. Because you can see there's not many gaps that price fully retraced into and then continued to drop. It was very difficult to maneuver within this price action. So what we need to do is we need to wait for stabilization and then a crack in correlation that will send us higher and potentially return into the range. And now we can do some Q&A. On a higher time frame for indices, would you say that the real move began on hidden SMT between December and February, looking at the daily time frame? You could say, but right here, there was that cracking correlation with this high being with the Dow, and also the Dow had a monthly cycle sequential SMT, and also there was a weekly cycle sequential SMT. So there was a multi-stage cracking correlation right here, which is what topped out the market and caused it to drop. And then what caused this to drop further was another monthly cycle sequential SMT. And yes, the daily time frame precision swing point. Do you expect quadrennial cycle SSMT to form on index futures? No, the index futures doesn't look back that far. Oh, quarterly cycle? I think it's taken pretty much all of, where was Q4's low? Price has already taken out the lows, so it wouldn't be possible for that to form. Do you look at news events to forecast the higher low of the month as well? Yes. And typically, you will find that happen with the first and second week of the month. Because within the first week of the month, we have the same exact news driver happen every single month. Within the second week of the month, we have the same exact news driver happen in the second week of every single month. So if you put 2 and 2 together, the same way you can predict higher low of the week, can also predict higher low of the month. Today's Monday model play out with FX. How could I have entered there on the 15-minute or 5-minute? How do I properly use standard deviation for stop loss placements if the previous swing is very large? I don't think we've discussed using standard deviations for stop or for stop loss placements, but looking at I believe you're talking about this right here. And yes, that leads back to what I was saying earlier. Even though price has offered a lot of points, if you have the markets out of sync, especially with the higher time frame, you can see there was no real high probability way of getting into this move. There was no clean gaps. There was no real easy to spot sequential SMT. And things like that are normal whenever it comes to low probability markets. So it just comes by means of waiting for conditions to become clear, and then you'll see setups that form that are a lot clearer with the same criteria. Is the 4-hour candle of today a potential PSP? Yes. Oh, you're talking about on Forex? Since all lows are taken in quarterly cycle SMT is unlikely, what would it take to say the market is now bullish? Do we need to focus on lower cycles? Yes, right now, lower time frame cycles will be a lot clearer. But once CPI comes out, that will give a lot of clarity. Is decoupling markets a good way to anticipate sequential SMT before it happens? Sometimes. There's a way to gauge it. But yes. Is CPI in most cases the monthly high or low? Yes. Either before CPI or after CPI, more times than not, you can see the high or low of the month. Do you think the weekly gap on NQ will be filled this week? Well, there's no weekly gap there because this candle hasn't closed yet. When the futures comp to the indexes have a large variation in price levels and taking liquidity, how do you interpret that? I'm not sure what you mean by that. But that PSP was right here for the person asking. The last time that day streamed was the week before last week. He didn't do a live stream last week, but he posted some lectures into the WAP. So then the PSP is only required on one of the triad assets and not the other two, meaning high, higher, high, lower, low. Yes. So as you can see, and I'll describe it the way you guys learned it. This is a down close candle on NASDAQ. This is an up close candle on the S&P. So that in and of itself is a cracking correlation. TBD part 3. You're about 3 months late. We've learned quite a few concepts. Will there be an entry model breakdown on the horizon? If you investigate a little bit further, this in and of itself is an entry model. To enter a trade or to enter a high probability trade, you only need 2 cracks and correlations. So whether it's a sequential SMT and a precision swing point, or an SMT fill and then a sequential SMT within that SMT fill, or a precision swing point and then a gap, and you just need 2 things for a high probability. Now, can you add more things into the equation and have multiple stages? Yes, but your frequency of trading will be lower, but your win rate will be higher. So it all comes down to you as a person. How patient can you stay with, or how well can you stay with doing nothing? Can you sit still and not take a trade for an entire week because your setup didn't form? If you can't, then you're probably not the person that would like to have multiple stages. If you're a more fast-paced person, you like to trade the lower time frame chart, then it might require less stages for you to click a button. But just keep in mind that your win rate will probably be lower compared to somebody that requires more information. So sequential SMT and sequential SMT fill is a model within and of itself. Yes. How many cracks and correlations do you personally need to see in every trade? Generally 2 to 3. What if you did a lower crack and correlation like you said, but you aim for less risk to reward to increase frequency and win rate? You could do that. And it's all going to come down to you as a person, how well you can handle yourself. If you see a lot of moves happen that run without you, and you just can't stand not being able to move, then you're not a very patient person. But that's fine. As long as you manage risk and you have a system that allocates for that, then you can, in a sense, aid your impatience and just move to a lower time frame chart and higher your trade frequency, but lower your risk. And vice versa, for if you're a very patient person and you don't care if moves run without you, if it doesn't form the proper information required, then you're good. But we're going to go ahead and wrap this one up here. So hopefully y'all found this one insightful. I will speak with you all. Quick shout out. Shout out to Cypher. But anyways, hopefully I will speak with you all, or I will speak with you all next week. With that being said, I believe Day will speak with you all Wednesday. Good luck and good trading.